if you could borrow money, let's take any individual. If you're an individual family and you've got a bunch of real estate and you could borrow money in a government subsidized mortgage for 30 years for 3% interest, and that was the case in the US 2 years ago. If you could do that and you bought Bitcoin appreciating at 55% a year, it would be a pretty good idea to borrow €1 million or $1 million, pay 3% interest for the next 30 years, and then invest it in an asset that's going up faster than 3%, right? In fact, that's how you get rich. You have a 20th century economy running on a crippled system with defective assets. And then you have a digital opportunity where you can actually run on a digital capital that is 100% available, where the capital has a useful life of 10,000 years, not 10 years, right? Where the impedance to the transfer, is theoretically close to zero, other than, whatever taxable issues pop up depending upon your domicile.
Michael Saylor offers a compelling explanation of why owning just 0.01 Bitcoin could potentially make you a millionaire. He believes that Bitcoin has the potential to solve 50% of the world's problems, particularly by addressing the widespread issue of flawed global monetary systems. While he acknowledges that Bitcoin won't fix all of the world's challenges, he is optimistic about its ability to correct effective financial infrastructures. Saylor encourages everyone to thoroughly research Bitcoin, advising people to dedicate at least 100 hours to studying it. According to him, this will deepen their understanding of Bitcoin and its benefits as a powerful digital asset in the global economy. As we bring you more clips from the interview, take a moment to like the video, subscribe to the channel, and turn on post notifications for more video like this. You can join the conversation by dropping your thoughts, comments, and observations in the comment section below. Everything you do helps with YouTube algorithm and immensely contributes to the channel growth. Thank you, and enjoy the video.
And that's the world that we're building right now. That's the opportunity. And so the reason I'm laser-like focused on Bitcoin is I think within 30 years, it's very reasonable, within 30 years from when Satoshi launched that network, you could actually introduce a $100 trillion digital capital market that takes us from a 2% solution to a 100% solution, that takes us from a 10, 20-year duration economic life expectancy to a 10,000-year economic life expectancy. So it's something that's achievable. It won't cure cancer. It won't get us to Mars. It won't solve, religious and political and social and ideological differences. Those things have to be solved by somebody else. And it's their life's work, and maybe they will, and maybe they won't. But I think as a technologist that the breakthroughs in civilization are fire, steel, electricity, petroleum, internal combustion engines, nuclear reactors, airplanes, railroads, right? Straightforward radio, right? Straightforward things, and then Bitcoin, digital capital. These are the breakthroughs. Each one of them came and it made the world a better place, but we still used it to fight wars, and we still use, and Stalin used steel, and Stalin used electricity. And so you're going to have issues. When I say 50% of the problems are solved by Bitcoin, I mean that 50% of the problems can be solved by digital capital, but the other 50%, they're going to be the work of corporations and politicians and institutions and intellectuals for the next 1,000 years, and that's okay.
Although much has been said about Bitcoin potentially replacing the US dollar, Michael Saylor offers a more nuanced perspective on why that assumption might be flawed. Drawing on remarks he made at the recent Bitcoin conference in Nashville, Saylor predicted that by 2045, the base case for Bitcoin could be $13 million. However, even with this growth, Bitcoin would only account for 7% of global monetary treasuries over the next 21 years, while most assets would still be denominated in government-backed currencies. Saylor believes that the world is unlikely to evolve to a point where Bitcoin entirely dominates the financial system. Instead, he sees Bitcoin as a form of digital entropy, providing a sound monetary alternative without replacing sovereign currencies entirely. In his view, even in a scenario of global chaos and anarchy, where traditional currencies lose their value, Bitcoin and other forms of digital capital would still exist as alternative forms of money. Let's continue with more clips from the video.
Yeah, I mean, I said in my speech in Nashville a few weeks ago, my base case is Bitcoin grows, an ARR at 29%, and even if it goes to 13 million a coin over 21 years, 13 million is a lot, right? I mean, if you're looking at where Bitcoin is today, and it goes to 13 million, it's a 200x. Bitcoin would still only be 7% of the world's wealth.
Yeah, dollars much larger,
and,
right?
Bonds will still be larger, equity will still be larger, real estate will still be larger. I don't, I happen to see that there's a dualism in the world that will continue. There will be currency, digital currency, and there will be digital capital. And I believe that digital currency will be whatever is designated as legal tender by the dominant nation states of the world, right? For the reason I pointed out, the tax reason. If China and the United States designate the CNY and the USD as legal tender, then you're going to be able to oscillate it at high frequency in an economic transaction with no taxable event. And so it's going to be the dominant currency asset. And on the other hand, Bitcoin will emerge as the dominant capital asset. But there are other assets that people want. They're still going to want credit. Companies and individuals will still want to borrow money, right? I mean, why wouldn't you want to borrow money? And governments will still want to borrow money. And there will still be companies like Google and Apple, and they will have equity. And there will still be people that want to live in buildings and houses, and there will still be skyscrapers and commercial buildings. So asset classes like commercial real estate, bonds, and equity will continue as long as there are people living in the real world. As long, robots might do all the work, but we'll still have warehouses to put stuff in from the rain and the snow, right? We'll still have airplanes. We'll still have trains. Someone will still securitize them with debt or equity. And there'll still be companies. Apple does something. It creates the iPhone. You can't create the iPhone. And so as long as there is specialization of labor and capitalism, there'll be companies. When the world goes communist, there's no equity. But I'm not forecasting a world descended to communism. If all the nation states collapsed and there were no nation states, there would be no designated currency. But I'm not forecasting that. I don't think a world without Apple and without nation states is a good world, right? So I'm not a pure anarchist. So I don't see the dollar disappearing. It's the dominant currency. If anything, and I think that when you construct this argument as, Bitcoin is against the dollar or Bitcoin is against the currency, I think it's unnecessarily confrontational and it's not constructive, and it misses the point, which is Bitcoin is capital, and Bitcoin really is demonetizing real estate, equity portfolios, and bond portfolios held as capital. And that's a $400 trillion addressable market, and Bitcoin is 1/400th of it. And so, if you're going to pick a fight, why don't you just pick a fight with gold and buildings and companies that have overpriced stock? They're not going to arrest you, right? They don't have armies. And the truth is, they're really the enemy. I mean, the enemy is I invested $400 trillion into real estate, buildings, and overvalued companies, and I could have just put it into Bitcoin, and Bitcoin would be worth 400 trillion instead of 1 trillion. So why don't you just focus upon that? Because eliminating banks and eliminating the government comes with a lot of other problems. Like what are you going to do when the government collapses and there's anarchy in the street and the police all go home and everybody gets to be their own policeman? And you know, it's like it's a nice fantasy that you're going to defend yourself with a gun, but the way it really works in war is someone over the horizon sprays a bunch of bullets over the hill and they hit you not even knowing they killed you, right? It's like you're not defending yourself against anything when anarchy breaks out, because they're just going to set the city on fire.
Michael Saylor, discussing MicroStrategy's Bitcoin strategy, emphasizes that any corporation can adopt a similar approach, which is why he has been advocating for it. In his view, it makes perfect sense to borrow capital at 3% interest in order to acquire an asset that offers a 40% annual growth rate. For Saylor, the most critical factor is understanding the long-term trajectory of an asset over the next 20 years.
If Bitcoin is appreciating at 55% a year, and you can borrow money at 5% a year, you're basically getting 50% a year on every dollar you borrow. Borrow $1 billion and you're making 500 million a year, right? If you could borrow money, let's take any individual. If you're an individual family and you've got a bunch of real estate and you could borrow money in a government subsidized mortgage for 30 years for 3% interest, and that was the case in the US 2 years ago. If you could do that and you bought Bitcoin appreciating at 55% a year, it would be a pretty good idea to borrow €1 million or $1 million, pay 3% interest for the next 30 years, and then invest it in an asset that's going up faster than 3%, right? In fact, that's how you get rich. I mean, the world's most desirable property is Bitcoin. And we did it before anybody else appreciated this dynamic. Obviously, I'm telling everybody, and some people will do it, but you know, as they say, everybody gets Bitcoin at the price they deserve. And you, in order to appreciate Bitcoin as digital property, you have to put in the 100 hours in order to understand it. And then after you put in the 100 hours to figure out that it is desirable property in cyberspace, then it becomes very simple exercise. You buy it with the cash you have, you buy it with the cash flows you generate, and then you ask the question, can I borrow any money? And if you can borrow money, you know, on terms where the note won't come due in less than 4 or 5 years, you're probably okay. If you're borrowing money mark to market, you know, you don't want to take 10x mark to market leverage because that's impermanent capital. You might get wiped out on volatility. So short duration, you know, capital, not a good idea, but a 10-year note, a 20-year note, a 30-year note, a 7-year note, not mark to market, that's a good idea. And then if you can raise capital via equity, if you have a business, you know, if you were in Germany running a supermarket chain or a restaurant chain, and you could sell, and your chain's valued at 500 million euros, and you could sell 500 million euros of equity, and then buy Bitcoin with it, then your supermarket's probably growing 3% or 4% a year. The Bitcoin's growing 20 to 40% a year. It's just like doing an acquisition of a digital monopoly growing 20 to 40% a year forever. I mean, if you went to any business person and you said, hey, I found the next Facebook and I guarantee you they're going to grow 20% a year for the next 20 years, and you can buy them at 2 times revenue or 1 times revenue or something, would you do the deal? Of course you would do the deal.
Sure.
And so Bitcoin is the perfect merger partner for anybody. And so buy it with cash, buy it with equity, buy it with debt, right? Buy it any way you can. Don't sell it. And that's the big corporate finance idea. And the people that can do it best are private family-run companies with excess cash or credit, Public companies, especially cash cows with credit or cash flows, they can do it. Institutions that are allocated to physical and financial assets that are effective, they can do it. A family, a worker. If you work at a McDonald's and you make 10 euros an hour or 20 euros an hour, if you invested in Bitcoin and then you calculate what it'll be worth in 21 years, if Bitcoin goes to 13 million a coin, it's a 200x return, right? So you're making 10 euros an hour, but it's going to return 2,000 euros. There's nothing more valuable than knowing where an asset is going to be in 20 years. It's more valuable to know that Bitcoin will go to 13 million in 21 years than it is to know it will go to 13 million tomorrow.
There you have it. Michael Saylor's insights on how Bitcoin can transform financial futures and create multimillionaires. What are your thoughts on Saylor's insightful discussion? Share your comments and observations in the section below. Don't forget to like the video, subscribe to the channel, and share it with others. Thanks for watching.